Welcome to Decrypt, Asia's first blockchain and cryptocurrency podcast. I'm your host, Tushar. Each week, we take a deep dive into the Asian blockchain scene with investors, technologists, and industry insiders. Go to decrypt.asia to subscribe to our newsletter and follow us on Facebook, Twitter, LinkedIn, and Telegram to join in the discussions. Hello, folks. Today, we will be speaking to Bankorus, formerly known as Michai, the world's first private wealth management platform powered by AI and built on the blockchain. Bankorus aims to bring several of the traditional banking products available to high net worth individuals to the crypto market. In addition, they're seeking to provide additional improvements to some of the more middle office and back office functions within banks, such as reporting, identity management, and risk management by leveraging the blockchain. Bankorus's innovative asset allocation and portfolio management system now handles a combined $30 billion for more than 200,000 high net worth individuals. Our guest today is Greg Van Den Bergh, CEO and co-founder of Bankorus. Greg launched China's first robo-advisor system under the former name of Michai in 2013. Formerly working for Morgan Stanley Private Wealth Management and GLG, one of the largest hedge funds in the world, Greg is originally from Belgium, a graduate of Oxford University and the Chung Kong Graduate School of Business. Greg also just had a baby last weekend. Welcome to the show, Greg, and congratulations on the new baby.
Thank you very much. It's my pleasure to be here. And I apologize in advance if there's some crying in the background.
No worries.
She just was born, so.
Completely understandable, but I'm sure these are very interesting and challenging times for you.
Absolutely. It's the birth of two new babies, so it's really, really exciting.
Let's start the interview. Before we go deeper into what you're trying to achieve with Bankorus, I want to talk about your current business of robo-advisory. Could you tell us more about your current business in terms of the kind of advisory that you provide, who your clients are, and what your current business model is?
Excellent. We have currently two lines of businesses. As you mentioned, we were the first robo-advisor of China, and we still offer that service as a B2B service for a variety of financial institutions where we offer white label robo-advisory services. So we provide them with a technology solution via which they can offer robo-advisory services to their clients, often with the existing products that the wealth management firm has at the moment. And secondly, we have a software system that currently is the market leader in China for private wealth management and private banking software, which is called Michai Apollo. We are using this for private wealth management firms to be used both by the end client, whether it's the family office of a high net worth individual, as well as the relationship managers that is serving the client, as well as within the company itself. And so we take care of part of the middle office. So we take care of onboarding the client, as well as part of the portfolio analysis. It's a system that automatically creates portfolios based on the inputs that the customers that we have, the to-be customer puts in, what they want their clients to be invested in, as well as we take care of part of the risk analysis. So it's a SaaS business model. So we sell it per user, or we have package deals for the businesses. And so currently, indirectly, 200,000 families are using the software to handle their wealth, to see what they have in portfolio with the wealth manager we work for, to manage the risk, etc.
Well, that sounds great. In fact, I was working as a consultant to private banks in my most recent job until I quit, based out of Singapore. So I worked a lot with Credit Suisse, Julius Baer, and some of the other private banks. So I find this, what you're trying to do even more exciting. So now you're moving on to sort of the dark side. You're providing crypto-based financial products to high net worth individuals going forward. Was there a demand from the client side which led you to make the move to crypto, or did you find this gap in the market so enticing that you absolutely had to capitalize on it?
Yeah, it's a great question. I think there are sort of three main reasons for why we did it. First of all, was utterly client demand. So most family offices are talking about crypto investments. They see the returns not just of Bitcoin but also of a lot of great crypto funds and other projects. So people talk about it. People are looking into it. And we get a lot of questions asked about it. It's early days for them to move into crypto, but about 20% of the people that we talk to within the next 6 months will increase their position or take a position of their total portfolio within crypto. So client demand is sort of the first one. Secondly, we have been using blockchain technology primarily for creating an audit trail within the software system that we currently have. A big key pain point that we had in the industry was that people buy a certain portfolio, work with a certain wealth manager, and then for whatever reason the performance they're not happy with after, let's say, 2 years, and then they decide to ask questions about, well, I wasn't aware of the risk, or I wasn't fully informed. And so it's really important for the wealth management firm to have a clear audit trail of what was sold to which person, what was signed, who exactly signed off on what was sent in terms of reporting, was the client fully aware of risk disclosure. And when we first started with the robo advisory for businesses, we found out that the problem of AI is partly linked to the data, and we spent most of the time cleaning up the data and centralizing the data for a lot of the companies that we were working with, and that just took such a great deal of time, so that we decided there has to be some way to centralize or decentralize the data, so we can have different permissions for different users. And blockchain was a technology that came up, and we looked into it, we liked it, and so we were already putting a lot of the data of the products that people bought on the chain. And so for us last year, the realization came that, well, if we're spending that much time to put actually the data of the products, the financial products, on the blockchain, so people can manage the asset on the blockchain, why don't we just securitize or tokenize the actual end product, so that the entire product, the entire asset, is 100% managed on the blockchain, which would decrease cost a great deal. I mean, currently, wealth management firms, wealth managers, relationship managers that face clients, spend over half their time often on administrative tasks, tasks to do with compliance, tasks that can be automated partly via smart contracts. And so, the second reason why we used this particular or move from the traditional SaaS model where we already use blockchain to actually put in the asset of the blockchain is that it is a very natural evolution, because we already were using blockchain. The only thing we're changing now is securitizing the asset. And then I think the third reason besides the demand from the clients and the actual the way of the industry is going is, I think, thirdly, the world is getting much more decentralized, which is a good thing. And I think with the compliance that's happening recently with the SEC and different regulators, a lot of it is becoming a security token. And so this market all of a sudden became really, really hot. Currently, more than 99% of all the tokens out there are utility tokens. We believe that will change. And so a security token platform that we've been building seems to be the solution. So everything kind of lined up really nicely in the last 2 months.
Yeah, that makes a lot of sense, and it hits very close to home for me. Having worked within private banks, I've personally come across all of the shortcomings, especially in terms of the process inefficiencies that work within the banks, something that you touched upon. Since you have access to high net worth individuals, I want to know what they are thinking about crypto. I also want to do it for the benefit of our listeners who might not necessarily have an idea of how the smart money or how the big players are tackling this asset class. So as a ballpark, what percentage of high net worth individuals, in your opinion, do you think currently have exposure to crypto, and what percentage is looking to get exposure to crypto?
I would say at the moment, early 2018, from the surveys that we've done amongst Asian clients, it's about 1 to 2% of the high net worth currently has a crypto allocation. And of that 1 to 2%, it's only a small amount where it's really more than 1% of the total portfolio they have. But if we ask the question, who in the next 6 months is looking to enter crypto, it's over half the high net worth is sort of looking to take a position moving forward. Whether it's dabbling into it, buying a few, a Bitcoin or something like that, or whether it's en masse, we'll see. But I think the trend is really irreversible. The reason being is that there are a lot of benefits for high net worth individuals to own crypto. First is the returns that you have seen. Secondly, it is the diversification of the portfolio. High net worth individuals, their first demand is often not to lose money, and so in order not to lose money, it makes sense to invest in parts of your portfolio that are not that correlated, so that when the market goes up or down, not your entire portfolio goes up and down. So traditionally, high net worth individuals have an exposure to gold because gold is often contrary to market trends. When the market goes down, often gold goes up, etc. And so crypto is a similar asset that historically, for the last decade, has been quite uncorrelated with other returns. And so you see that if you put 5% or 10% of your wealth into actual digital utility tokens, Bitcoin, Ethereum, Zem, etc., your performance is much more uncorrelated, and your portfolio is less risky. I think a third reason that high net worth are moving into crypto and talking about this is because crypto or blockchain as a technology can just provide a much safer way for them to invest. Whether it's on the custody side, whether it's smart contracts are transparent, it's very difficult to do a Ponzi scheme because everything is on the chain, everything is decentralized, etc. So the benefits are definitely there. Now, if I would aim for one key benefit, besides those three, it would definitely be on the liquidity side. High net worth individuals, other than most investors, most of their wealth is tied up for the long run because it's in real estate. You cannot buy a house tomorrow overnight. It's locked up in private equity funds or venture capital funds for often 10 years. And so because their portfolio is so illiquid, they often look for ways to improve the liquidity of the portfolio. And so tokenizing traditional investments, whether it's real estate, farmland, venture capital, private equity, art, gives them a secondary market in which they can buy and sell part of the assets that they already have. And that value proposition is really attractive for a lot of the high net worth individuals. And that's also what we're aiming for. On the other hand, you see an emerging class of crypto high net worth individuals. And we had a lot of demand from them that they say, look, I've been a miner for many, many years. I have tens of thousands, hundreds of thousands of crypto positions. But I would like to diversify, and I would like to move into different types of assets. I would like to buy a house because I would like to retire in Australia or in Singapore. Is there something available? What can I do in order to make sure that if Bitcoin drops 20%, I don't drop with my total wealth 20%. So that's something of the questions that we have, and there's much more interest from a lot of the whales invest in other things with their crypto. So there's a big demand on that side, and our platform kind of connects the two, because traditional high net worth want to get into crypto positions, whereas crypto high net worth, they would like to get into more security tokens, liquid assets, to create a diversified portfolio, and that is something Bankorus provides. Does that make sense?
Absolutely. I mean, you touched upon some of the things and value propositions that Bankorus brings to the table, and I'll get to that in a minute. But before that, you mentioned custody, and that is something I want to get, pick your brains on. What are high net worth individuals or private banks or family offices or some of the whales doing to solve custody issues that some of the more retail investors might not know about?
Yeah, it's a big problem, and currently we haven't seen a very good solution to the custody issue. I think you're right in saying that I was at Polycon, the first security token conference, a few days ago in Bahamas, and the topic was what is standing between now and the mass adoption of crypto. And it was said that, well, most family offices, most high net worth, they don't want something where you say, look, all your wealth is in tokens, and here's a piece of paper with 24 words. And if you lose that paper, you lose all your assets, and there's no way of getting them back. And this is, really bad customer experience. And a lot of family offices and high net worth don't like it. Well, we haven't seen any real good solution for high net worth on the custody side. We are building one of them, and we will release more details in the future. What I can say, however, is that there are some business models that have solved the custody problem, not for crypto, but for other assets. A bank is a typical example, right? If I lose my bank card or I lose my PIN number, it's not that all my money is lost. A bank has a license to hold different assets, to be a custodian of your assets. And so if you lose your PIN code, they can do verification, and yeah, some people pass verification even if it's not legally, but the bank has insurance mechanisms for that, and your deposits are insured. So that is what's happening in crypto. There hasn't been any player yet that have stood up and said, look, I'm willing to give similar guarantees, willing to do that. Bankorus is looking to do that and looking to come up with a solution from the industry, for the industry. One of the key backers, investors, and advisors is a former CEO of Morgan Stanley's private bank. He's been dealing with tons of family offices, high net worth, and we believe that we at Bankorus have a solution to solve not just that custody part, but also the actual marketplace side, where people buy the tokens in a compliant way. Because a big fear of a lot of high net worth is, great, I buy the tokens, it increases a lot in value, but what then? I have to be compliant. I have to make sure I'm fully aware of all the implications of holding tokens, and eventually I want to get rid of them and sell them for something else. And so those questions Bankorus really aims to solve.
Let's just move on to Bankorus now. I think it's since you were talking about it. So you've divided your product offering into three main categories: modules, functions, and engines. And I want to talk about each of those. From my understanding, having read your white paper, I understand that engines is something that is already available, which is your AI-powered robo-advisor. Modules is where the fun stuff happens, including the trading and tokenizing of assets and the asset-backed loans. And functions is the relatively boring but essential bit, which helps with the KYC, the risk management, and reporting. Is that correct, high level speaking?
Correct.
So let's dive into modules, because that was the section that I found most fascinating as well. So perhaps we can spend a bit of time there. Within the module section, you have three main offerings: so B tokenize, B loan, and B market. Could you talk about each of those, high level speaking? What is it that each of those products offer to the high net worth individuals, family offices, and private banks?
Great. The main module of the three is B market. The best way to see it is, think about it like Amazon, but for security tokens. So we're looking to be the everything store for any type of security token, whether as an underlying, it is real estate anywhere in the world, venture capital funds, crypto funds, hedge funds, farmland, art, any kind of category, we will have it worldwide. That is what the B market is about. And so having that particular marketplace model, we work primarily with third-party vendors that issue security tokens, such as Polymath is one of them. There is Trust Token. There's Securitized. There are recently a lot of companies that stand up and say, look, we have assets, or we have access to assets. Let's tokenize them in a compliant way. And then when they tokenize them, they will have to list them on a marketplace, a security token exchange, etc. We would be we are that marketplace for them, where they can connect their security tokens with potential investors, high net worth individuals, crypto wealth, etc., that we have on the platform. So that is what B Market does. Now, besides working with third-party vendors, sometimes we have people come to us and say, look, we have certain assets that we would like to tokenize, and we have a branch which is B Tokenize that actually helps third parties to tokenize part of their asset, part of their wealth. So that's something that we offer as well. And so that's what B Tokenize is about. And then that token that is being made from the B Tokenized module will be listed and for sale on B Market as well. Does that make sense?
That makes
Excellent.
absolute sense. So talking about B Tokenized, or unless you want to talk about B Loan first, and then I can get into.
Yeah, sure. And so B Loan is the module that creates loans of securitized loans that are backed by particular assets that are set on the blockchain. So many high net worth individuals, rather than selling off some of their assets and then moving that money into cash and then from cash into crypto, they would come to us and say, look, I have a certain asset. I would like to borrow against that in crypto. And then we take that asset, put it on the chain, put a smart contract against it, and issue a loan to them in crypto. On the other hand, some people have a lot of crypto. They would like to borrow against it in either other crypto or in cash. So that is something we look to offer as well on the Bankorus platform. So that is then B Loan. And then on the other side of a loan, there's always an investor. So the investor can be us with our own capital, or it can be a third-party investor, like Salt Loan, for example, that would issue a loan, but then the loan needs to be credited. That particular credit is a fixed income product that people can buy on B Market. So B Market would list, borrow out your crypto, invest in a fixed income product for 6 months, get X return. So that would be something that we would facilitate under B Loan, and then the actual investment of the loan would be listed on B Market. That's how the three kind of work together. But B Market is really the centralized marketplace.
Talking about B Tokenize, so essentially it's allowing high net worth individuals to tokenize their assets for greater liquidity, right? So the underlying asset in this case could be art, could be real estate, and could be assets which are not the easiest to value. So how would an investor who is looking to buy some of these tokens value the underlying asset? I mean, is this something that you help them on?
Yeah, correct. That is something that we help them on. The valuation itself, if we do it via B Tokenize, we'd get third-party valuers to come in. There are third-party valuation companies that would value a certain asset, or it could be that the owner of the asset itself can say, look, I own an apartment. It's Fifth Avenue in New York. It's 100 square meters. This is the building. My neighbor sold his apartment 2 months ago for this price. It's also a 100 square meter apartment, similar location. I believe I can list my apartment for the same price. And then what is happening is the tokenization issuer can decide how much he wants to report, how much data he wants to have. But at the end of the day, it's kind of like, what's the share of this? What's the price of the stock? It really depends on supply and demand. It really depends on what the public market thinks should be the price of that particular stock, and that is something that we are doing. Does that make sense?
Absolutely.
So I mean, we think that different security token issuers will have different standards. Some will report, very, very clearly what the price should be. Other ones should be more vaguely, and there should be a premium for better reporting. So the market normally, the decentralized marketplace normally would come up with a much better way of valuing property than it's currently being done by real estate agents that have a particular region that they know the pricing about.
Sure, and I think this would be a great value add, especially especially for high net worth individuals who might have their wealth tied up in non-liquid assets. And speaking of, we spoke about B loan, which is essentially borrowing crypto with traditional assets as collateral. So say a high net worth individual borrows crypto against his stock portfolio. And if the stock portfolio, for whatever reason, or the land holding tanks, you would have mechanisms in place to a margin call of some sort, so that the collateral can be topped up.
Could you specify the question a little bit more?
Sure.
I'm just trying to find out, because
Yeah. So, so hypothetically speaking, I have a stock portfolio and I don't want to liquidate my stock portfolio, but I want to borrow crypto, putting my stock portfolio as collateral.
Yeah.
Does that make sense? Yeah.
That is a possibility. So that rather than getting a margin call in your broker account, you'll be able to transfer or collateralize or get a loan, basically, that's backed up by the current value of the stocks.
Yeah. And so in case the stock portfolio goes down, there would be some sort of a margin call for the high net worth individual to top up the collateral, which is the stock portfolio in this case, right?
Yes, or other type of collateral. Yeah. So the way it works, a lot of the borrowing in crypto against certain asset or securitization of asset is nothing new. It exists already. In some in many cases. However, the cost normally of securitizing your assets is quite a lot. I mean, if you go to a bank and say, hey, you know what, I would like to borrow 10%, remortgage my house for 10%, it takes a very long time. If you want to go to if you have a venture capital fund investment and you want to borrow against it, it's really difficult to get liquidity. It's a very laborious process, and probably no underwriter would do it for a very large amount, because the due diligence is pretty big. It takes a long time. It's a very manual process. What we offer at Bankorus is we reduce the cost of doing that, because blockchain technology reduces the cost. So the tools that are available, like you mentioned, margin call, exemptions, etc., that are currently only in the hands of very big family offices, very big institutional investors, blockchain and Bankorus platform puts it in the hands of many more people.
I want to now move on to the functions product offering. So within functions, you have, again, 3 products: B Report, B ID, B Risk. B Report is the first product that will be going live based on your roadmap somewhere around Q2 this year, and is essentially a real-time reporting tool. Could you elaborate more on how this reporting tool will be superior to the reporting tools that are used in the market today?
It's not really a product. It's more of a standard. So it's a decentralized standard of reporting, which rather than trying to replace current reporting standards, just tries to set a standard way of calculating certain key metrics, such as net asset value, such as return. Because currently the issue is that many custodians that do the reporting for different assets such as venture capital, private equity, hedge funds, have just different ways of calculating what exactly is return. It's time-weighted returns, average rated, it's risk-weighted. And there are just so many ways of calculating it. So it makes, from an investor point of view, it's quite difficult to compare different types of products with each other, because they all have different ways of they calculate metrics. And so what we would like to do is we are proposing a certain standard, a certain fixed way of reporting certain metrics in a transparent way. And we aim, and we would like to put forward, not just for people on the Bankorus platform, but anyone into crypto, to uphold certain standards of reporting and do it in a very uniform way. So it's really easy for investors to check, oh, that's the real return of that particular crypto fund, and that's the real return of that crypto fund. And it's the same, by the way, for B-risk, which is a uniform way of analyzing risk, of calculating risk. There are different ratios: the Sharpe ratio, the Sortino ratio, and a lot of the times these are quite conflicting for people. So we all the data that we have, we open up for people as well to and for third-party risk managers to calculate the risks of certain portfolios, to calculate the risk in a system, which we believe is very beneficial for the industry as a whole, because it's now 10 years ago the financial crisis happened, and one of the key reasons the financial crisis happened is because people just didn't really understand what the risk was they bought into in the different products. And so we aim to standardize this, or at least push for a standardized way of calculating risk, and put it really, really transparent on the blockchain, so that other third parties, not just Moody's and Fitch, will be able to calculate these, but basically everybody can see how everything is interlinked. We think there is a power in full transparency and openness. That's also why one of our investors and advisors is Roger Kirby, who is the head of one of the largest security law firms in the United States, Kirby McKinney. They're the ones that have had a case against Moody's from Moody's shareholders because of the sort of wrong business they were in, and the wrong way that they analyze different risks of particular financial products. In the same way, this is the firm as well that litigated against Citibank, Citibank selling knowingly bad products to people that were not aware of the risks. And so they won. It's one of the largest financial settlements in history, of over $500 million that Citibank had to pay back to its investors because of not the right risk disclosures, etc. So all the modules, B-risk, B-report, BID, etc., are modules that we want to create as a standard for the entire financial industry.
You're building your product on NEM blockchain. Is there any particular reason to go with NEM? What was your decision-making process?
We use, yeah, great question. We use a variety of chains, NEM being one of them, because most security tokens are listed on a variety of chains, whether it's Ethereum or others. And so we have to support a multitude of them. It is true that part of our smart contracts are done in NEM. The NEM platform is very strong in Asia. It's very strong in Japan, Singapore, Malaysia, part of our target markets. What makes NEM easy to use in some sort of smart contract is the fact that if there's a bug in a particular contract, a typical case you might have known from your times at the bank is that a relationship manager signs up the person, but in one of the documents the name is misspelled, or they have some strange character, and in order to you have to be able to change that. And so NEM allows kind of a seamless way to roll back into time a particular data input, which is necessary for several business cases that we've seen in reality. And other chains it's much more difficult to roll it back, where you have to completely break down a smart contract and create a new one, which creates a lot of hassle. The other thing is, if you want to, it's relatively easy to find developers that can code smart contracts in NEM, because NEM uses a lot of the existing coding languages rather than creating their own. So that's another scalability thing. Also, the Lon Wang, the president of the NEM Foundation, is an investor in us. So we know the team quite well. But again, we support any type of security token, and we built as a platform on a multitude of chains. So for us, it really depends on what is the best for the customer experience, rather than this is exactly a chain that we only support.
Moving on to the token, you have a token called BKT. Could you quickly elaborate on the role of the token?
Okay, so the Bankorus token has three main crypto economic parts to it. The first part is, like with most currencies, most tokens, it's the main network currency. So if you would like, so every third party that is that we pay on the platform, whether it's identity verification people, whether it is people that have to do passport control, creation of accredited investors, etc., we pay them with our token. So it's the main network token. Also, if you're a user of the platform, the actual trading fees that you can pay in most currencies such as Bitcoin, Ethereum, etc. However, you can also pay them with our token, the BKT Bankorus token, and if you do so, you basically reduce the fees by initially 50%. So it's similar to Binance and other exchanges. So with us on B Market, the fees you pay will be less as well if you use your own token. So that's the first part. The second part is all the token holders that have done more than 3 transactions in one particular quarter, they're able to claim back on a quarterly basis 20% of all the fees that have been generated, net fees that have been generated on the Bankorus platform. So you can claim it back via staking the token, adding value to the network. So that's something we believe is quite interesting for the token holders, that they are able to get they're able to get part of the fees back if they're very active on the platform. And then thirdly, similar to a private bank, there are different tiers of customers that we have. We have silver customers, gold customers, platinum customers, and you maintain your particular platinum membership or gold membership, silver membership via holding in perpetuity the tokens, and for a minimum of 90 days, keep the tokens. Keep the tokens to get the benefits, and then you can renew every month. What does it mean to be platinum member? Well, platinum member or gold member gives you earlier access to particular products, early access to new technologies, new services, beta releases, etc. Especially for crypto high net worth and high net worth, when we have particular really nice assets that are very rare. For example, we have a Picasso for sale, or we have a penthouse in Vancouver downtown, really good location for sale. Then gold members, platinum members will be able to buy that particular asset outright. So rather than having fractional ownership via the tokens, they actually can put in a bid to own the whole asset outright and buy all the tokens at once. And then if it doesn't get sold, it will get fractionalized. So those were part of the benefits that token holders would get, and a lot more concierge services. And we're really looking to make it the most elite experience, the most premium experience of crypto high net worth and high net worth in the crypto space.
Yeah, it sounds great. I mean, it sounds like a combination of access rights, payment rights, and a few other fringe benefits that one can get. Bankorus recently got selected into the JD.com accelerator. And for the benefit of our listeners who might not know JD.com, it's a It's a competitor to Alibaba in the e-commerce space in China. And they recently launched an accelerator for AI and blockchain startups. Has the program begun already, or you've just been accepted into it so far?
We were actually one of the founders of the program. We have the same venture capital investor as JD.com, as Jindong.
Right.
Okay. The team pretty well, and we actually, we're talking together a few months ago and said, look, we've done a lot of AI, both of us. Why don't we focus on blockchain as well? And Bankorus has been working a lot on blockchain. Might be something interesting for JD to do as well. And then JD was like, okay, how can we do it in the most efficient way? And accelerator is sort of one of the ways that you can accelerate the learning. So the program officially hasn't started yet, although informally there are a lot of conversations going on, and both parties are seeing how exactly that we can help getting JD on the blockchain, and also how the Bankorus ecosystem and the JD ecosystem can have an overlap and a mutual benefit. So yeah, we're really happy that we're the only company in Asia, not just in China, but in Asia, and also the only company that has a very big AI component to work together with JD or Jindong, how it's known in China. It's the third largest internet company in the world by revenue. So we are really happy to have access to them and their resources.
Before we wrap up, I want to ask you a question that I ask all my guests. I want to get your outlook on the blockchain space in general. We're obviously in very early stages. Where do you see it heading over the next couple of years? And, are there any particular areas that you're particularly bullish on or that you have strong opinions on?
Good question. I think for us, the main conviction is that within this and 5 years' time, it is possible to own your entire wealth in the form of tokens. So we don't think there will only be a growth of actual digital utility tokens and assets, but specifically on the security token side, I think the way that we're a little bit different is that we think now 99% of all the tokens is a utility token. Within this and 3 years' time, 99% of all the tokens will be security tokens, and we will securitize a great deal of assets. And we think that this particular wave will happen really fast. The World Economic Forum, predicted that by 2027, 10% of world GDP, so it's 10 trillion, or more than 25 times the current valuation of all cryptocurrencies combined, will be on the blockchain. And so we ascribe to that as well. We think that will definitely happen, and the fastest way of this happening will be high net worth moving into crypto via security tokens, via normal tokens, via compliant platforms like Bankorus. That's really the big future trend that we see happening, and you can see it in the States already with the great success of Polymath and T0, etc. So we think that will be the main thing. And then for Asia, I think Asia is going to be the continent for sure where we will see a lot of the innovation. I think what's happening regulatory wise in the United States will make that a lot of the innovation will be stagnating, and this is a golden opportunity for Asia, where all the regulators, or most of them at least, have been very much in favor of crypto. So I think the next 5 years, blockchain, is definitely a lot of interesting things coming out of Asia.
Exciting times indeed. I do agree with you, especially when it comes to security tokens. Any last comments from your end? You have a public sale of your ICO coming up. What's the best platform for people to follow you as well as Bankorus's developments?
The best place is to join our Telegram group chat, which is t.me/Bankorus, BANKORUS, like dinosaurs. That's really the best way to follow us. Otherwise, our website, which is bankorus.com, bankorus.com.
Great. On that note, let's end this interview. Thank you so much for taking the time out and providing us with those fascinating insights, Greg.
It's a pleasure being here. Thank you so much. And apologize for the interruption of my kid.
No worries, and congratulations again on the baby.
Thank you so much.
If you enjoyed this episode, please subscribe to this podcast on iTunes, Google Play, SoundCloud, or wherever you listen to podcasts. Like us on Facebook, Twitter, LinkedIn, and Telegram, and subscribe to our newsletter on Decrypt.